Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead, program sponsored by Delta.exchange. Last week, US markets closed in green, but remember the previous week was the worst week in the last many months. Why? The reason was simple. People were expecting 50 basis point hike in the next Fed meeting, and as some governors spoke, that fear has receded. Now they are expecting 25 basis point hike only, and also the bond yield has come down slightly. So there is a relief rally, we can say. And Nasdaq 100, which went up to nearly 13,000, came down to 11,800. It's fallen about 12%. And now from Thursday low to Friday high, it was up nearly 500 points. So that's almost 5%. So US markets tend to be very, very volatile. As and when there is a good news about inflation, shoots up. As and when there is a bad news about inflation, crashes. Same thing here, but instead of inflation, it is Adani. As and when there is a good news, the market shoot up. As and when there is a bad news, the market crashes. Last week, one good thing about both Indian as well as US markets, both closed in green and on a weekly candle. So that is something very, very positive. And Adani Group bulk deals, block deals helped the market to turn around in India. In US, of course, as I told you, the Fed governor speech has turned around. And PSU banks, after falling so much, started recovering. In fact, I can say the PSU banks have bottomed out, and because they have fallen so much already. So coming week, there are 5 working days, but one day, Tuesday, is a public holiday. So there will be only 4 trading sessions for markets. And SGX Nifty, because on Friday markets shot up in US, SGX Nifty was higher. So SGX Nifty closed at 17,730 on Friday night, which is slightly higher than the Friday's high of 17,725. Markets Nifty future hit 17,725. Then in the last half an hour, I always say the last half an hour or 1 hour on Friday, there might be some counter trend because the people don't want to carry positions over the weekend. So the Nifty has fallen about roughly about 65 points. But now on Monday morning, it's likely that we will be opening gap up of more than that 65 points. And now clearly the markets have become buy on dip rather than sell on rally. Say for example, 65 point fall on Friday afternoon, if anyone has bought it, so they will be rewarded on Monday morning. So this is not an invitation for you to buy every dip, okay? Of course, if you are a trader, you know where to keep the stop loss, you know how to take the stop loss. So definitely the trend seems to have changed, and by sensing this, I bought call options, and I financed it by selling some put options. So that's what I do. As and when I feel bullish, I buy call options and sell put option to finance it. And as and when I feel bearish, I buy put option and finance it by selling call options. Coming back to data wise, there is only one data very, very important. That's all related to jobs data. On Wednesday, private sector jobs data. On Friday, US jobs data, main thing. And then on Thursday, jobless claims data. So they are the 3 important data to watch. And also we will be going closer to March expiry for US markets. US markets March expiry is on 17th of March. So the markets tend to be volatile going towards the expiry. So in India, there is no economic news except IIP data, which will be coming on Friday evening. But the impact will be seen only in the following week, so not this week. So for this week, we can say not much of a data. So although we are taking a bullish view, but all the bullish views are subject to two key risks. One key risk is the US inflation. Fed chairman will be talking, I think, on 2 different days, Tuesday as well as Wednesday. So markets will be keenly watching. So what is going to talk? And if he talks hawkishly, the whole thing can change upside down. Just like when Atlanta governor spoke, the whole thing changed from downside up. So there's a possibility. So US inflation is one key risk, both as downside as well as on the upside. So that is one thing. Second one, for our Indian markets, so this Adani saga is a key risk. Just look at the Adani enterprise. From 3,000, it came down to below 1,000 in just 2-3 trading session. From below 1,000, went up to 2,200, 2-3 trading session. From there, it came to 1,200. Now again coming to 1,900. So it will be going all over the places. And this week, the US firm GQG bought 15,500 crore worth of shares, and so that is the one that changed the sentiment. But already people who are against Adani, so they started talking many things. Number one, this GQG is owned by an Indian, and number two, all the investments, about 90 billion plus investments of GQG invested in high dividend yield, high value stocks, and none of their stock is more than 10 PE ratio. Their average PE ratio is only 7 to 8. Then why should they invest in Adani stocks where the PE ratios are much higher than their average PE? So the people are like speculating all kinds of things. So just like Hindenburg accused, so it is Adani's own money is coming back through FIIs. So is this something like Adani's own money coming back as a foreign investment? And again, another thing, GQG has bought, so that's very good. A foreign company is buying, but who sold it? The entire stake was sold by Adani Family Trust or Adani Trust, whatever it is. So it's basically Adani. So it is not an open market purchase where the retail people have sold it, right? So it is who bought GQG, who sold Adani. So that is one thing. Another thing, when totally unknown name of GQG, when it is coming and investing 15,000 crore, what happened to all those people who paid 3,200 rupees for Adani Enterprise in the public issue? Why they are not coming and buying now when it is trading at less than half the price? So we have no answers. We will never know answers for all this. So these are all big players games. So as a common people, we will never know. And as a common people, we are not worried about also. We are not worried about GQG. We are not worried about Adani. We are not worried about George Soros. We are not worried about Hindenburg. But we are only worried about the collateral damage the stock market, the entire market is getting. So we are only worried about the market. We are not worried about individual stocks. Of course, if you are trading in individual stock, that's a different story. But generally, I made it a point not to trade in stocks from this month. I just traded some small quantity Adani port, and which I am struggling now. And of course, I will come out with profit. So no matter where Adani port goes. And it's interesting to note that Adani port has come to pre-Hindenburg price almost. I think before the Hindenburg report, Adani port was trading around 700 plus. Then after the Hindenburg report, George Soros comment, it came below 400. And from 700 plus to 400 minus. Now again, it's almost very close to 700. I think on Friday it went up to 693 or something, then did a small correction in the last half an hour. So anyway, Adani Port is not a big issue because that is not a stock trading with a high valuation. So it's only the other Adani group stocks which are trading with high valuation. I'm taking a bullish view very clearly. Number one, this bullish view is only for the short term, not for long term. And number two, this bullish view will be negated if there is any bad news with respect to Adani or US inflation. So that sums up the whole discussion today. So, but right now markets are positive, ride the wave. So that's our philosophy. Hope you enjoyed watching this video. Thank you for watching.